Hello everyone and welcome to this learning video. In this video you will learn how to read charts and how you can better your decision making skills. So if you just look at the price chart of any stock, it's very confusing. Like you have no idea what to do, like whether to buy this particular stock or sell this particular stock, what to do. You have no idea about. So to get an idea you have to do certain marking in the sense you have to find certain levels which tells you a story. when I'm What I mean by that is, see, you have to find out first what the stock is doing or what the stock is trying to say, whether it's weak, it's strong, what it shows, whether it shows footprints of institutional buyers, it shows footprints of retail investments, what it shows. So you have to find the trend first, what you have to find the story, what's happening, and then only you have to write your chapter. Means you have to make your decisions. Okay, so there are different techniques and methods used to read the charts, but what I'll be teaching you today are the basically the core concepts. If you learn this, if I would say, if you mastered this, then it will be easier for you to trade any of the assets, not just stock. You'll be able to trade in bitcoin, you'll be able to trade in commodities, in currencies, in everything. Okay, so this core concepts basically I'll take you on the whiteboard and I'll explain you. Okay, so basically there are four uh, core concepts, okay, or four things that happens on a chart and that you should know to read. First one is accumulation. Second one is supply. Third one is buying absorption, and last one is selling absorption. If you understand these four things, then trading and investment will be a little easier for you. You will be able to take better decisions. Okay, now what this accumulation means? Okay, so basically these are cycles, or you can say four zones that are formed on the chart, and these four zones helps you understand what the stock is doing, whether it's strong, whether it's weak, whether institutional buyers or institutional sellers are in it. So it gives you a clear picture. Now let's come to the main topic, what these zones are and how you can find it. So first one is accumulation zone. So accumulation zone is nothing but it's basically buyers are accumulating the stock, or institutes are accumulating, means they are purchasing the stocks. Okay, and whenever this accumulation is happening, institutional buyers, what they will do is they will try to bring this stock off radar, in the sense this stock won't be won't be a stock which will be talked about. So this retail institutional investors, what they will do is they completely bring this stock off radar. And how they will do it is basically they will decline the volume in that particular stock. Means wherever they want to purchase or accumulate, what they do they make the stock least interested for the outside world. Okay, and how they do it is basically they decline the volume. And how they do it is basically simple. uh, Say suppose now stock is, these are the candles. Okay, these are the candles. These are the candles, the price is moving up. Okay, so what this people will do, institutional buyers will do is basically they will first buy more quantities. Okay, and later on they will just buy smaller quantities of that particular stock. Okay, they will literally drain the liquidity. Okay, and they will buy in smaller this quantities. So what will happen is the stock volume will decline. This is basically the volume. Okay, so the stock volume will decline and price will move in a range. It will be in the price will move in range. Okay, it won't uh, show bigger moves. Why it won't show bigger moves? Because this institutional buyers, what they are doing is they are basically accumulating in that particular zone only. Means say suppose the price here is uh, 95. Okay, here 100, here is 100, and here is say suppose 105. They will buy in this range only. They won't go outside of this range. Okay, they will buy certain some amount of stock at rupees 95, some amount at 100, then at 105. Then again they will wait. Once the stock comes down, they will buy little quantity at 102, like that. They will accumulate. Okay, and the stock volume will decline. Okay, and once their inventory is full, once they are done purchasing at that level, then you will see the price will move. Okay, and this is when price moves above this range, that's when people talk about the stock. Why? Because then the volume starts increasing. Means then other retail investors come, you know, and other parties come. uh, because then once the volume increases, then it becomes a stock to talk about, because everybody talks about stocks which are like, heavily invested in. Means where there is more volume, people are interested, then people come, jump, and they invest. So then other people will come, but the institutions have already purchased at 95 to 105 levels, and they are done with it. And now retail investors and other parties involved in the market will basically move the stock up. Okay, and who is basically making more money here are the retail investors. So how you can find accumulation zone is, once you see that volume is declining at a range in any stock, that time you have to be aware that okay, accumulation is happening. It's not, that people are least interested in this. It's just that uh, these institutional buyers are basically buying smaller quantities in background and are ready to take the stock price up. Okay, that becomes your accumulation zone. Okay, I'll just clear this. Next comes the supply zone. Supply zone is opposite to accumulation zone. Okay, at accumulation zone the volumes were decreasing, but at supply zone the volumes will increase. Now people will think that, there are more transaction happening in here, so people are interested, the price will move up. No, it's happening in the background is that the institutional investors who have actually accumulated this stock before, now they are basically supplying the inventory. Means whatever stocks they have, they will be supplying. And for supply they need more people interested in that particular stock, because say suppose I have a stock, I need to sell it, so I need also a buyer, right, to buy that stock. So they will here try to make this stock more popular, more interested, so people will jump in, and whatever inventory the institutional investors have, they will sell those inventory to those retailer or any other party that is coming in the market. Okay, that is called supply. Understood? So here what you will see is the volumes will be increasing, the volumes will be increasing. Okay, and price, okay, it trades in a range, it will break out, and then it will fall. I'll show you the price. What will happen is price will first trade in a range. Okay, it will show a breakout, then it will show a breakout, price will move because they want more parties to come in, right? Once the breakout happens, more parties come because they think okay, price have moved out of the zone, so people will start coming in, and then suddenly the price will drop. Okay, and the whole process volume will increase, volume will go up, in the sense volume not just of buying volume, also selling volume, it will be a combination of it, but you will see rise in volume. Okay, and then the price will fall because they are done with selling the inventory, now they don't have anything, so then the price will fall because of lack of liquidity, and also because there is no now parties interested in buying the stock above. Okay, this is the supply. Then third comes your buying absorption. Okay, now if you understand buying absorption, then you can capture good moves in a particular stock. Buying absorption is basically means buying absorption basically means buyers are absorbed by the sellers. Okay, and when buyers are absorbed by the sellers, the price will fall faster. Okay, and with a lesser risk you can achieve more profits or gains, but for this you have to do intraday. Okay, or you'll have to buy put side this options. Fine, so what buying absorption means is basically buyers are being absorbed. So this is, suppose these are buying candles. Okay, I'll just make it green. Okay, so suppose these are buying candles, what sellers will do, and volumes will also increase here because buyers are coming, right? So volume will also increase. So volume also is increasing. Okay, but what suddenly will happen is sellers will absorb these stocks. Okay, they will absorb this buying transactions. Whoever is buying at this zone, they will absorb it and they will bring price below. Okay, and how you can figure out is that buying absorption is happening, it's very simple to figure out. Is basically you will see that the volumes will increase here, the volumes will increase, but the candle size won't be increasing, the candle size will be smaller. See, the volume has increased but the candle size is smaller, it's not matching. If there is more volume, the candle size or the body of the candle should be more, but here the body of the candle is less. That means that they are whatever the buyers are trying to buy, okay, they are being absorbed, means all the sellers are just selling the stock at that price and they are not letting the price go up. Okay, and this is buying absorption, and buying absorption breaks, and if buying absorption breaks, the price will move downwards. Understood, and it will fall very fast. Fine, it will fall very fast, it will, retraced a bit, it may retrace a bit and it will fall very fast. And if you try to find buying absorption at higher time frames, then you can capture a very good move. Okay, you can buy put options and you can capture the whole move. Next comes selling absorption. Selling absorption can be a great opportunity for buying. Okay, and you can capture good move buying side. For swing traders, selling absorption could be a great opportunity to make money. Okay, now what this selling absorption means is basically all the sellers, whoever are selling, are being absorbed by buyers. Okay, and when absorption is happening, the price moves very fast. Okay, if after absorption zone is breaked, the price moves very fast. So what will happen here is again same, but here it's a vice versa of buying absorption. So again volume will increase, and this time it's selling volume. Okay, this time is basically selling volume. So just I'll mark this is selling volume. Okay, this is selling volume, it is selling volume. Okay, selling volume will increase but the candle size will be smaller. volumes are increasing but the candle size is smaller. That means all the sellers are being absorbed. Fine. And once these zones are broken upside, the price will move up, because it shows that whatever sellers were trying to sell and bring that particular stock downwards, buyers are not letting it happen. They are just absorbing all the transactions, all the entries, and they are taking the price at a higher set. Okay, and buying selling absorption is great opportunity for buyers, because you can capture good moves here. You can generate good returns if you understand the selling absorption and buying absorption. If you want to really make your career in trading or investing, this core concept, it's a must for you. You have to understand this, because breakdowns are somebody else's perspective. A market doesn't operate on flex and all. They are operated by institutions, DIs, FIRs. So you have to understand their moves. You have to know how to read them. So if you understand how to read them, it will be very easy for you to move along with them, and you will be generating more returns over the period of time. Okay, so it's been around 6 years for me in the market, so I have understood a little, and I'll try my best to pass it on to you, so that you also become you know good at reading charts, and you also make good financial decisions. So thank you so much. If you like my channel, please subscribe to it. Please like my videos, and see you some other day. Thank you so much.